Inventory is still on the way up, but starting to tick down a bit. Buyer's demand is still cooling. Median home price drops that we have been seeing are starting to level, as well as the price decreases on active listings. Let's go ahead and let's dive into what's happening right here in the real estate market in the Treasure Valley right after this. Well, welcome back, everybody. Mike Petras here, your Star Realtor of Star and the Treasure Valley, back with another episode of Mikey's monthly market updates for the month of July 2022. If you're new to this channel, this is where we're going to go ahead and break down what is happening right here in the real estate market, right here in the Treasure Valley or the greater Boise, Idaho area. For all of those that are returning to this channel, of course, you're probably familiar with what this is all about. So let's go ahead, let's dive into all that information and let's see what's happening right here in the real estate market in the Treasure Valley. Okay, so let's go ahead and let's start off with Ada County like we normally do. And we're going to go ahead and start off with the median and average sold prices that we've been seeing. Of course, as I mentioned in the last couple of Mikey's monthly market updates, that really officially we are started our market correction. Really that kind of topped out about early June, late May as to when we saw really the top values right here in the Treasure Valley. And again, is it just because a lot of people are deciding to list, or is it really because the buyer's demand has tapered and cooled off? As we dive through this information, we'll go ahead and we'll cover that. But I just want to go ahead and kind of point out, since January of 2022, we did start to see our increase. And in fact, we actually rose an increase of 11.52% overall since the first of the year in our overall median home price right here in Ada County. As we go along and dive through the data, of course, we did hit really the top around May, early June of what the median home price was really showing in Ada County at $602,250. And you can see that we declined. So in June, when I did the Mikey's monthly market updates, you can see we went down about $10,000. And as we're taking a look now into July, we're seeing that we've only decreased about $4,000 in our overall median home price. So really, between the total inventory that we have out there in single family residences, Ada County hasn't been doing too bad so far. Really only during this market correction, we've seen a decrease of 2.03% overall in Ada County. As you continue to watch this and we dive into Canyon, you'll notice that those numbers are kind of a little bit on the different side. But again, what I'm seeing here is a softening of the median home price and a potential return to stabilization, which is great if you own a home. So the values may be starting to level out here as the economy in itself seems to be sort of working itself out. Of course, that's debatable. Please leave your comments below. Would love to hear your thoughts on that. But there are some reports out there as of yesterday saying that the Fed is seeing softening in the inflation rates overall that's happening in this country. And they might even be anticipating that it's going to cap. But we will not see that next CPI report or the inflation report until September 13th. So it's something we'll definitely keep an eye out and I'll report as I go along. But we are still seeing that downward trend in the overall median price here in Ada County, but it is starting to slow down a bit. So we'll just have to wait and see. Inventory, as I mentioned at the very beginning, still on the way up, still really at record numbers. But why? Is it really because more people are going out there and listing their properties, or is it because the buyer demand is cooling off? And really the answer to that is that the buyer's demand is cooling off. As we can see, we are definitely in hot season, even though the school year is right around the corner. Okay, and that will change some things, plus along with the holidays when that hits in later Q4. But either way, during the hot season, we're noticing that our buyer demand is going down. Well, why is it going down? Well, really, we all see it in the inflation. We're paying more at the supermarket. We're paying more for gas. We're paying more for everything that we have to live on. And that's really kind of just sucking out the savings that buyers really have, which is the goal of the Fed. The Fed really wants to discern you from being able to take out new loans and credit cards to purchase services. They'd much rather have you pay it in cash so they can take that cash essentially out of circulation and be able to bring the overall CPI rise that we're seeing or inflation down to an acceptable level, which is for them at 2%. Of course, we know the inflation's at 9.1% right now, but let's just hope that the Fed, with their recent increase that they did at the federal funds rate, will be able to tame that. And these reports are really right. And hopefully it can go back down in the other direction. But we're also seeing our pendings dip as well. So again, it's just the buyer's market generally cooling, and people want to sell in this particular market. They want to get out. They want to make a lateral move somewhere else. But we are seeing the inventory rise tip off a little bit. And why are we starting to see that? Because we are getting into parents taking their kids back to school, don't want to make the move right now. Or maybe even another variety of reasons. But either way, we're starting to see that kind of level in itself. But we are still on the way up. We still saw a jump, but not really kind of like a record jump that we saw in March into April, into May, and then now into July. In fact, actually, the total inventory for all single-family homes here in Ada County is sitting at 3.5 months of inventory, which was up from 2.61 months of inventory last month. So we are on the rise, but it is starting to taper off, and we'll just have to see how that works. So if we're looking at the existing home inventory, again, still really shot up, but you can see the buyer's demand going down. You can see the inventory starting to take a little bit of a turn there, but I do anticipate the inventory to continue to rise and the buyer's demand, especially cool off. Now that we're even going to be getting into Q4, typically you'll see listings come down because nobody really wants to sell their house really during the holiday season, and nobody really wants to buy a house during the holiday season. Not all the time. And actually, that is a great time for buyers and sellers. I mean, if you want to get a home, the holiday season is always a great time to go in, but that's a discussion for another time. New construction, same thing. We're hitting inventory levels that we haven't seen since 2019. But if we're looking here at the buyer's demand, again, on its way down, inventory still on the way up, but starting to click over and take a bit of a turn. So what I did last Mikey's monthly market updates, and I want to continue to do, is just kind of show, I guess, is it existing homes that are really taking the hit in median home price, or is it new construction that's taking the hit in median home price? And as we can see here, back when we capped in May of 2022, late May of 2022, early June, we were sitting at a value of $586,750, and we can see that the existing home values in the median home price have now dipped down to $549. We did take a significant, jump down this month as compared to, say, in between May and June. So we'll just have to see what's going on with that. But if you're looking at the total homes, considering new construction too as well, we might still be seeing that stabilization return. But the existing homes here in Ada County have taken a hit of 6.43% since we capped off in May, late May, early June. But again, keep in mind, we also rose 14% since the beginning of the year. So basically what is happening here is that it's just chipping away at the values that we gained since the beginning of the year. If we look at new construction, last month I had mentioned, wow, that was a huge jump between the 639,105 we saw in May to 690 in June. But I also did say that I would anticipate the median home price in new construction in Ada County to come down. And it did. And it definitely took a shot down. So we'll just have to wait and see whether or not that's going to stabilize or that's going to continue to come down. Days on market, still looking pretty good at 21. But I also said last time, a lot of the buyer's demand has kind of jumped out. So is it just because maybe lenders have a little bit more time to pay attention to particular files? Maybe so. Okay, in terms of why the days on market are still generally low. But cancels and expires, if we're taking a look at that, again, the trend is kind of coming over. A lot of when the cancels do hit the MLS, it's because people are a little on the reluctant side to sell for a variety of reasons. And mainly it's probably because, the economy is shaky, as we all know. Again, if you're making that lateral move over somewhere else, the interest rates, which have been kind of bouncing up, back, and down in really good and still historically low levels, can still be shaking confidence in between what somebody has in their savings to make the move, what gas, food prices, all that, and even the interest rates factor in. So I do anticipate to see the cancels continue to probably be on the rise or stay about this level, as there's some cold feet in terms of being able to sell. Plus, there's also buyers sometimes out there that can't complete their transaction, perhaps maybe because the interest rates happen to knock them out of that particular transaction. Sellers got frustrated and said, you know what, might as well just cut it a day. So either way, we'll continue to track those numbers as we move along. So again, just to recap what happened in Ada County this month, the median sales price did come down a little bit more, okay, at $589,990. The homes sold also dipped down at 33.8% year over year. And the inventory, again, is still on the way up, but did make a slight flex to possibly not on the extreme rise that we saw over the last couple of months. And then again, our days on market are sitting at 21. Canyon County, your turn. And I've noticed that you probably noticed when we're doing Ada County, what I wanted to show here was what the prices were like in January before we really dipped up at the beginning of the year up until the market correction hit. In Canyon County, we actually rose 12% over this span. And since in Canyon County, you can see that sharp decline in the median home price went down to $441,995, which actually dropped 7.24%. So Canyon County overall in the total single family homes available has taken the biggest median hit as compared to Ada County. If we're taking a look at this though, we did have our peak back in April of 2022 at 476,500. We dropped pretty significantly here, about close to $20,000 into May. And we only dropped about 15,000 from what it's looking like here to June. But now look at what's going on in Canyon County with the median home price. We only dropped 3,000. Okay, so again, we're starting to see the potential stabilization return here to the median home price in Canyon County. We did have a stabilization that happened from April all the way up until the beginning of this year, of last year, to where not a lot of equity growth was going on. So can we anticipate that stabilization return to our market? Absolutely. And that's what the Fed wants. They want stabilization. They want to discern people from, going out there taking loans on a bunch of stuff. This is their whole point. Even though the federal funds rate does not have the correlation, a very slight correlation, to mortgage rates like the mortgage-backed security treasuries do, or mortgage-backed security bond markets has. So we are seeing, again, the median home price is starting to not dive down as far. But if we're looking at the inventory, again, buyer's demand is cooling here. We mentioned in Ada County as to why I believe that's the deal. Again, not so much as people listing their homes as just the buyers. Really, they're feeling the economic pressure as we go along. But you can see the pendings are coming down as well. And inventory, again, is starting to take a slight tick. Is that because kids are going back to school? Is it going to be because the holidays are coming up in quarter 4? Yeah, we can probably anticipate this to start slowing down some. Again, we did see the record jumps in inventory between March, April, May, and we are seeing that turn the corner, but we still have a high inventory out there. So when I break this down for buyers, sellers, investors, and renters, we'll go ahead and we'll talk about the best strategies there. Existing home inventory, again, you can see the buyer's demand is definitely sharply taken a dive, and we're almost kind of hitting levels that we saw back in January of 21. And the inventory, again, is starting to still take that slight click. And if we look at the new construction inventory, again, boom. Now, one of the other things with new construction inventory is that some of these construction companies, especially the smaller ones and not the bigger companies like CBH, Hubble, etc., even though they're slowing down a bit, a lot of the other smaller builders are starting to really slow down and not make the land purchases that they were anticipating to do. In fact, I know of a couple builders, right now they're actually selling off some of their land because they're just a little bit on the nervous side where the federal funds rate may be, and if they have to take out loans to get their products. So either way, anticipate this to tick too with the inventory, maybe not jump up as much. But again, we can also see the buyer's demand on the way down. So again, who's kind of the biggest loser, here in Canyon County when it comes to taking the dip in our market correction on the median home price? Well, if we're looking at the existing homes, again, we had a slight one between May and June. But this month alone, we really kind of dipped down, about $17,000 roughly, which in the existing home market has dumped down since our peak at 425, 5.30%. That has been lost in the median home price. And if we look at the builders, and we look at new construction since the peak at 549 back in April of 2022 has actually jumped all the way down 10.4%. But again, I want to mention that the existing market rose 9% since the beginning of the year. So really, it's about a little over half of what that was lost since the beginning of the year. And if we're looking at the new construction, it rose from the 465 to 549 at 18% and has now jumped down 10.4%. So again, a little bit over half from the gains that were made at the beginning of the year. But again, look at the jump that we have here. That's about $22,000 from May to June. And if we're looking over here, well, we're about kind of still on par with that. But we'll just have to wait and see how these markets generally level. If we're looking at the days on market, again, still high. I mentioned in Ada County, low, but they are ticking back up. And again, is it just because maybe lenders have a little bit more going on, but there's also, or a little bit less going on, but the buyer's market is also dipped down. And of course, we know that price decreases are happening all over the Treasure Valley, which I will get to in a little bit later segment as well. Cancels again here in Canyon County are on the rise. Again, maybe because people are getting cold feet about making that particular move, lateral move to wherever it is they want to go. And maybe they're also just kind of seeing what's going on with the market and don't want to. So Canyon County, let's go ahead and let's just recap here. The median home price overall was sitting at $441,995. So we did come back down a little bit with our market correction. The home sold is sitting at 354, which is down. So the buyer's demand is definitely down. And our inventory is up. And again, it's more, not because people are listing their homes right now in record numbers as it is just not as many people looking to buy. And if we're looking at the total of months of inventory that we have here in Canyon County, for the total single family homes out there, we're sitting at 3.8 months of inventory. Existing homes are sitting at 3.6 months of inventory, and the new construction is sitting at 4.2 months of inventory. I don't think I mentioned it in Ada, so I just want to go ahead and recap. I know that I mentioned the total single family homes is sitting at 3.5 months of inventory, but the existing homes is sitting at 3 months of inventory, and the new construction is sitting at a whopping 4.9 months of inventory. So now let's go ahead and let's break this down about what's happening really by city here in the Treasure Valley and what's really happening individually in these markets. So let's go ahead and let's start off with Boise. As we all know, we are in our market correction, and you really kind of saw, that shoot down from about, May 13th, and really about the top of the market here was about Friday, April 29th. And it's all gone all the way back down here to 575. So we're seeing that the new the median list price that is happening right directly in Boise has been on the way down. But if you really kind of notice all the way from about June 17th up until today, and you look at this data, you can see that it's starting to flatline itself. So is some stability coming back to, say, Boise in itself? Potentially. If we also take a look at the price decreases that we got going on, you can see that they started to almost level themselves out too. Back just a few weeks ago, We noticed that the price decreases on all the active listings was sitting at 59.65%. And today we're sitting at 61%. But you can see how that's starting to turn. You can see how maybe the buyers are starting to see, what's generally going on. They're jumping in there because, the values of these homes are coming down, and they want to take advantage of it and be able to get in there and get the home for a little bit of a cheaper price as compared to what you could say back in early this year, or when the market actually peaked in May or June. But the market action is still on its way down, meaning that the buyers just generally aren't out there to soak up the inventory that's available. And we can see, again, we are shooting back into a buyer's market. Now, that is a whole nother conversation. Are we in a buyer's market right now? Can a buyer's agent be able to ask for generally more concessions and be able to negotiate a better price on the home? Well, yes, I actually feel that we're in a buyer's market right now, and the shift is gone on, and the sellers really have kind of lost their power. So I do take the market action index that they do have an Altus research in Boise with a little bit of grain of salt, because they're really just kind of going off statistics saying a 6-month inventory being a true buyer's market. But that is not always the case. And we can see it now in negotiations and concessions that are being asked for buyers. So buyers, it's a great thing for you. And we'll go ahead and discuss that when we hit our final thought section after this. So let's go ahead and take a look at Star, the same kind of pattern. If we look at the median list price overall, we can see that we're starting to flatline out here in this particular market. If we look at our price decreases, again, we were really actually back up a couple of weeks ago at 61.71% of the active listings that were taking price reductions. And now we've started to turn that corner. So what could this be meaning? It could be meaning stabilization returning to our markets overall. Market action, again, is still softening, and I would anticipate that to continue to soften too as kids are going back to school, as buyers really kind of aren't out there to be able to make lateral moves, etc., or especially when the holiday season hits around Q4. Looking at Eagle, again, same kind of thing. We started dipping down, and if we're taking a look, we're now starting to basically flatline over the statistics here in the median list price. So again, are we starting to see some stabilization return? However, price decreases because Eagle really is the most expensive area here in the Treasure Valley. I could probably see the price decreases continue to kind of stack up a little bit more before they might start to flatline. And if they start flatlining and these markets start getting better, which again, I'll cover my final thoughts, we can start to see these come down and the market action on the rise. But again, the market action is on the way back down. They're saying that we're really, really close to a buyer's market according to their algorithm. But really, we kind of are in a buyer's market. It's kind of made the shift. If we're looking at Meridian, again, same trend. We're starting to kind of flatline here, but we'll just have to keep paying attention. The price decreases have semi-stabilized themselves too. So that's something to keep an eye on. And of course, the market action is also on the way down. Kuna, we're still seeing the median list price taper down a bit. We did kind of like have ourselves a flat line around June time, but it's starting to come back down. But the price decreases. Look at that. We've really kind of just flatlined. But again, the market action's on the way down, which is just indicating that the buyers are starting to cool to that particular area. Now I got to get this out of the way, but let's go ahead and go to Middleton because I had a little pop down hit to where I couldn't get to the tab I wanted to go to. So let's take a look at Middleton. Middleton has really flatlined itself in the median list price overall. Price decreases, again, are starting to flatline themselves, but the market action, again, is still on the way down, indicating that the buyer's demand is cooling. Emmett's median list price has jumped up a little bit, but you can see it's starting, still on its way down a bit. The price decreases, though, out in Emmett are on the way up. Okay, we're at 47%. And when we hit this peak here in June 24th of 2020, we were at 41.67%. And then today we're sitting at 46.79. So we're kind of on our way up. And again, the market action is still the same. Caldwell, the median list prices are still kind of coming down, but you can see that they're really kind of not coming down at the levels that we see in earlier. But look at our price decreases here in Caldwell. The price decreases on active listings are actually on their way down. But again, we'll just have to keep monitoring the data and see what's really going on. And then lastly, we've got Nampa. Nampa, the median list prices are on the way down as well. Again, same kind of trend. The price decreases are ticking up, but you can see they're kind of slowing down as to what we saw, back at this lull here at 35.1% in June 17th. But again, the market action is on the way down. So that is what is going on city by city here in the Treasure Valley. Let's go ahead and get to my final thoughts right after this. Well, thank you so much, everybody, for sticking with me, and welcome to the final thoughts section here on Mikey's monthly market updates for July of 2022. So let's break this down. What is all this data meaning? Well, first off, our median home prices we're seeing is starting to taper off in the overall total single family homes. Now, are there some existing home markets and new construction home markets that might still be in the market correction a little bit more than, say, the latter? Of course. And is our inventory still on the way up, and is our buyers' demand starting to cool? Sure. Well, the one good thing that we do got going on is that there's still investor confidence in the mortgage-backed security market or the bond market, and also the 10-year treasury yield. So now that has been bouncing a little bit back and forth over, say, the last couple of weeks, and especially really since the job report hit, which was last week. That really kind of shook up a little bit of the investor, or actually not a little bit, but it did shake up the bond market, because generally what you need to know is that when this economy is doing well, and especially like the job report and the ISM, which is productivity, is saying that, hey, our economy is doing good, it generally has a negative effect on the bond market to where people will start selling off their bonds. And of course, as we've learned, if you are watching and subscribing to this channel, and if you don't, please subscribe, hit that notification bell. But either way, is that when the value of bonds are down, the interest rates go up. When the value of bonds is up, the interest rates go down. So what happened when the jobs report hit, it was indicating still a good economy. The bond market dropped, interest rates went back up. So they have been doing a back and forth. But again, a lot of this is there some political play into this to be able to kind of shake up what is happening really in the markets to avoid that term recession, which we do know that it's already here from the 2 negative quarters of GDP. And then, of course, another good indicator is that when inflation is over 4% and unemployment is under 4%. So is a recession here? Sure. Now, are they trying to do whatever they can to stave off the actual inflation hitting, to where every news agency is talking about it? Of course they are, because we do have the midterm elections right around the corner. So again, just kind of keep that in mind. So buyers, what does this mean for you? Well, first off, since we've been in the market correction, definitely you're going to see a cheaper home value. Again, is there still a lot of active listings that are seeing current price reductions across the Treasure Valley? Yes, there is. But is that starting to taper now? Can I start seeing that go the other direction, especially if interest rates dump down, prices are cheap, and we're also in a buyer's market? At that point, it should be able to bring out the buyers. And I'm actually anticipating probably a hotter Q4 than usual, especially during the holiday season, because I can just see buyers coming in, trying to take advantage of that while they can. Because do I see this market eventually flatlining, and do I see it maybe flatlining and getting out of the market correction maybe a little sooner than later? Yes, I can definitely see that. So buyers, keep that in mind. And if that happens and the buyers start returning, then the prices could actually very well start to incline again and become higher. So buyers, definitely a good time to reach out to your mortgage professional. Today, interest rates are still historically low. They're just sitting just above 5% today for a 30-year fixed loan. And if there's also plenty of other options out there that you can do, that you can get rates for like a 15-year fixed, which is under 4% or under 5%. I'm sorry, not under 4. Sorry about that. Under 5%, and other products too as well. And usually when stuff like this happens with our economy. And in order to keep the real estate market going, some of these mortgage companies will also start coming in and offering different products and incentives in order to get you to buy. So buyers, this is a good time. Of course, if you do want to wait around and see, I probably wouldn't give it way too much more time to do that, because this very well could change and change overnight. So buyers, if you're looking to buy, please feel free to reach out to me, 208-715-7827. Let's get to you sellers next. All right, sellers, it's your turn. Let's go ahead and let's break down what's happening. As we can see, I mean, there is some good news here that's happening, and that's maybe we might be returning to some stabilization and kind of more or less work ourselves out of this market correction that we currently are in. Now, do I have a crystal ball? No, I'm just kind of going off of what the data is indicating to me. And of course, I do keep in touch with that data on a daily basis. That's my job. That's what I enjoy to do. So right now, I know you're probably feeling the pressure. You're like, wow, you know, my house has really kind of been sitting on the market, or you've probably already made a price reduction. Well, again, it's not because, I mean, do you have competition out there? Yes, you do, because our months of inventory is on the rise. But again, as I mentioned during the video, is it really because sellers just want to sell, or is it because the buyers have really kind of started to dip off and cool because they're just feeling the economic pressure all the way around? And it's going to be the latter. It's going to be the buyers. So just be patient. Buyers will definitely be out there. But if you are looking to sell, or you've been kind of in a lull of selling your house, just remember, appropriately pricing your house and fair market value is going to be key in this one. Now, we have shifted over to more or less a buyer's market. So keep in mind, if you do get a buyer, you might see some more concessions that they might be asking for. They might try and negotiate with you more than, say, usual, because really the power is kind of swung into their direction as compared to what we had, say, a year ago, when you had generally all the power. So sellers, if you are looking to sell, please give me a call today. Would love to set up an appointment with you to come on over and discuss a fair market value about your home, and all sorts of great strategies on how we, especially here at NextHome, can get your home sold in the quickest amount of time possible and for the most money possible in this market. So I look forward to hearing from you. All right, investors, it's your turn. Wow, have we seen an increase really kind of in investors nationwide coming in and taking advantage of what is happening here in this market, especially with those, you know, with cash, or those that maybe have a little bit more to be able to throw down and get a better capitalization rate. But the thing is the prices have been coming down. Rents have been going up. So if that's what you're looking to do, definitely this is a good market to do so. But, you know, again, also investing in real estate is a great way to hedge against this inflation. Now, is the Fed possibly have capped our inflation? Let's hope so. Let's hope that this starts kind of going back the other direction, but we'll just still have to wait and see. So investors, if you are looking to invest right here in the Treasure Valley, we do have one of the highest rental rates and actually in the nation, and we're increasing at one of the highest rates in the nation still. So it's definitely, and the capitalization rates are still sitting about 3-4%, which isn't terribly bad in the long run. I'm sure that there's other markets out there in the US that has a better capitalization rate. But of course, you know, the more money that you can throw down on a loan to get a secondary property, or if you're just coming in and buying in cash, well, of course, that's probably going to be the best scenario. So if you're looking to invest, feel free to reach out to me today. And if you are actually in the flip game, hey, I said it right again without stumbling. If you're in the flip game, there is more inventory out there. Do your diligence, take a look, see what's going on, and hopefully you can get that property to flip and turn a profit. Renters, you're next. All right, and last but not least, renters, of course. I say this every single time. Sometimes maybe rental is a good thing for you, especially if you do not plan on staying here in the Treasure Valley for any kind of extended period of time. So then rentals will be perfect for you. But if you are renting and you think you have the means and all that, reach out to a lender today. Reach out to me. I've got great lenders I can go ahead and have you talk with. Because again, you're paying 100% interest rate. You are actually fitting the bill for your landlord. So I would like to see you get into this market, because what's going to come down eventually is going to come back up. If you're thinking, wow, I'm waiting for 2008 prices to hit again, Again, as I've said in prior and many videos that I've came out with, I would not expect the 2008. That was for an entirely different reason. And if you'd like to discuss that, please feel free to call me today. But I do look forward to hearing from all of you. If you are looking to buy, sell, or invest right here in the Treasure Valley, feel free to reach out to me today. I can be reached at 208-715-STAR. Again, that's 208-715-7827. And if you're looking to begin your home shopping experience today, please feel free to visit my website at www.yourstarrealtor.com. Also, if you're thinking of moving to the greater Boise, Idaho area, or what's known as the Treasure Valley, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with the videos that I do come up with, and I look forward to hearing from you. Well, thank you so much, everybody, for taking the time out of your day to watch this video. I look forward to the day we speak. Look forward to the day I call you my neighbor. God bless. Until then, thank you so much. Bye-bye.